This is TechCrunch. Swedish buy now, pay later startup Klarna and its shareholders are reviving its initial public offering, hoping to raise as much as $1.27 billion in a listing that would value the company at up to $14 billion. The company and some of its shareholders are together selling approximately 34.3 million shares between $35 and $37 each. That's according to a company update earlier this week. Klarna would receive proceeds from about 5.6 million shares, while its shareholders are offloading nearly 29 million shares. Klarna has long been expected to go public thanks to the massive success of its buy now, pay later lending model in the wake of the post-pandemic boom. 6 years after launching in the U.S., the company had a valuation of more than $45 billion in 2021. However, the company has been putting off its IPO plans as the market turned at the end of the ZIRP era, its price tag declining by 85% to $6.5 billion when the 2021 venture capital valuation bubble burst. Still, Klarna's been growing well. Its revenue rose 54% to $823 million in the second quarter compared to a year earlier, thanks to a 14% increase in its gross merchandise value to $6.9 billion. Now, the company's bottom line is still in the red, with net loss coming in at $53 million, though that is 42% less than its net loss of $92 million a year earlier. Goldman Sachs, JP Morgan, and Morgan Stanley are running the offering, and Bank of America Securities, Citigroup, Deutsche Bank, Societe Generale, UBS, and several other banks are also working on the deal. Lithium has become the default choice for battery-powered systems, but its limitations, from volatile supply chains to short lifespans, are becoming increasingly difficult to ignore. Offgrid Energy Labs, a deep tech startup based in India, wants to make lithium less central, especially when it comes to battery storage. The 7-year-old startup has developed a proprietary zinc-bromine-based battery system as an alternative to lithium-ion technology. Called Zinc Gel, it delivers 80 to 90% of the energy efficiency of conventional lithium batteries, but at a significantly lower levelized cost of storage. As power demand grows worldwide, countries are ramping up efforts to expand renewable energy storage. India, as a prominent nation in this regard, aims to increase its non-fossil energy capacity tenfold, from 50 gigawatts to 500 gigawatts by 2030. New Delhi is also targeting 236 gigawatt-hours of battery energy storage capacity by 2031-2032, and announced a roughly $612 million funding plan in June to develop 30 gigawatt-hour battery storage systems in the country. However, like many global markets, India faces a key challenge: China's dominance over the lithium supply chain. Offgrid Energy Labs is betting that its zinc gel battery technology can ease supply constraints by using widely available materials and offering a more cost-effective alternative to lithium-based systems. Now, the startup has raised $15 million in Series A funding to scale up its operations. It plans to build a 10-megawatt-hour demonstration facility in the UK, expected to be ready by the first quarter of next year, and begin commercializing zinc gel in the quarters that follow, with a gigafactory in India planned as the next phase. The startup spent its first 6 years developing battery technology and has so far secured more than 25 IP families and over 50 IP assets across markets, including the US, the UK, India, as well as China, Australia, and Japan. The battery is based on zinc bromide chemistry with a proprietary water-based electrolyte, resulting in a low risk of fire. Zinc gel is also capable of handling longer discharges, between 6 and 12 hours, multiple times throughout its lifetime, and it can last twice as long as a typical lithium-ion battery. Furthermore, the battery utilizes a carbon-based cathode for both fast charging and discharging. Zinc in batteries is not a new concept, and some companies have already offered zinc bromide-based batteries, including the NASDAQ-listed EOS Energy Enterprises. However, the company noted that Offgrid Energy Labs uses its patented assets that help bring down the cost. The zinc gel batteries can also reduce the need for using graphite, which helps bring down their production cost. Off-Grid Energy Labs technology is also designed to allow for tweaking or sub-optimizing the battery based on the application. Now, this means that these zinc batteries can operate independently of environmental conditions and provide energy storage even at temperatures as low as minus 10 degrees Celsius. The startup is targeting industries with net zero goals that want to maximize renewable energy use by integrating battery storage. Its batteries are also being explored for applications such as peak shifting and decentralized off-grid energy solutions. Shell, which invested in Offgrid during its seed round through its corporate venture arm, and Tata Power are among the early testers. The startup is also in talks with global players, including Europe's Enel Group, to develop batteries tailored to their specific use cases. The startup plans to leverage its facility in the UK to demonstrate its technology to early customers next year. The facility will have a carbon footprint 50% lower than that of a typical lithium battery gigafactory, and the startup has opted for simpler manufacturing processes to reduce both capital and operational expenses. That's it from TechCrunch. For more stories like these, go to TechCrunch.com.